Welcome. In this video, ZBCN coin has formed a bullish pattern. Is pump coming? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
As a result of careful technical examinations conducted on the chart, it has been observed that the price has been moving in a downward trend over a certain period. However, this decline has not developed as a classic selling pressure, but rather in a narrowing structure within certain boundaries. This narrowing and downward sloping pattern is defined in technical analysis literature as a falling wedge formation. When examining the structural characteristics of the formation, it is evident that both the support and resistance lines are sloping downwards and progressing in a converging manner. In other words, as time progresses, the price starts to move within an increasingly narrow range. Such a structure indicates that investors are in a state of hesitation and that there is a prevailing uncertainty in the market regarding direction. However, this uncertainty usually does not last long, as falling wedge formations often signal a trend reversal. In the current situation, it can also be said that the observed formation is a falling wedge developing within a downward trend. These types of formations typically indicate that the downtrend is nearing its end. In other words, while the price continues to decline, the strength of the downtrends is gradually diminishing. Each new low is less deep than the previous one, and each high remains lower than the previous high. However, the most noteworthy detail during this process is that the declines are becoming more limited and buyers are increasingly taking initiative. This shows that the market is losing its downward momentum and is entering a preparatory phase for an upward move. The most critical element in falling wedge formations is how the price reacts to the resistance line that forms the upper boundary of this narrowing structure. If the price has touched this upper boundary multiple times without breaking it and has pulled back slightly each time, it indicates that the formation is maturing and that a breakout is near. Currently, the chart under analysis shows that the price has once again touched this upper boundary. This suggests that a potential upward breakout may be imminent. Breaking the upper line not only means surpassing a resistance level, it also signifies the release of compressed energy in the market and the beginning of a new trend. Therefore, upward breakouts and falling wedge formations are often accompanied by sharp rallies supported by strong volume. This is because the buying power, which has been suppressed during the formation, creates an explosive effect at the moment of breakout, leading to a rapid price increase. Especially if there is a rise in volume during the breakout, it confirms the move. Currently, the price is hovering at the upper boundary of the formation, and a breakout at this level holds significant technical importance. If the price manages to surpass this boundary, it will indicate that buyers have taken control and that the selling pressure has ended. In such a scenario, the initial target is usually an upward movement equal to the height of the widest part of the formation. In other words, the distance between the bottom and top of the formation is measured and added to the breakout point to determine the potential target. This measurement method is widely used in technical analysis within the framework of formation measurement rules. In addition, not only technical but also psychological effects come into play after such breakouts. Especially investors who have been waiting in a declining market for a long time may see such a breakout as an exit point or a new opportunity. This increases buying pressure and supports upward momentum. Likewise, investors who have held short positions during the decline may start buying to close their positions, which adds further upward pressure. In other words, these types of breakouts symbolize not only a technical, but also a psychological transformation. Furthermore, the potential retest movement that may occur after the breakout is also very important. The price typically retests the broken resistance, which now acts as a support level. If the price successfully bounces upward from this new support during the retest, it reinforces investor confidence and triggers new buying. This is a technical building block that ensures the rise is healthy and sustainable. In conclusion, the falling wedge formation currently observed on the chart is a highly critical technical structure. This pattern is often considered a signal of trend reversal, and when broken to the upside, can pave the way for a significant upward move. Especially if the price has touched the upper band of the formation multiple times and each time was accompanied by an increase in volume, this indicates that a breakout may be just a matter of time. During such upward breakouts, investors should reassess their positions and take strategic steps, as this could open the door to substantial potential gains. As the breakout moment approaches, market participants become more attentive, as such a structure represents a critical threshold both technically and psychologically. Investors view these formations not just as price patterns, but as representations of market sentiment. And when analyzed correctly, these patterns can be powerful tools for predicting the market's next major move. Therefore, the current falling wedge formation should be closely monitored. A potential breakout at the upper boundary of the formation could lead not only to a short-term price increase, but also to the beginning of a new trend. For this reason, it is very important for technical analysts not to overlook such patterns and to closely follow the developments after the breakout. But we can't make decisions based on the formation alone. Let's also take a look at other metrics. Stay tuned.
When looking at the current structure on the chart, it is evident that the price has been moving upward in a certain direction for a while, and that this movement has been progressing in a rather consistent manner. One of the most important technical indicators of such steady upward movements is the rising trend line. Rising trend lines are drawn when the price makes successively higher lows and higher highs. This line serves as an upward sloping support placed beneath the price action, connecting the low points. The preservation of this type of structure is extremely important for the continuity of the trend, because once the trend line is broken, it can lead to a significant shift in investor perception, which may dramatically affect price behavior. A similar structure is currently noticeable on the chart. The price has approached this trend line at certain intervals, sometimes touching it, but each time continuing its upward movement after finding support from the line. This shows that the market considers this trend line as a significant dynamic support. Technically, this line serves as a barrier preventing the price from falling further. However, to fully grasp the importance of this line, it should be evaluated not only from a technical standpoint, but also from a psychological perspective. Rising trends are not just about prices moving in a certain direction, they also reflect the prevailing positive sentiment in the market. This kind of structure indicates that buyers are dominant and sellers are on the sidelines. As long as the price moves along a rising trend line, optimism and confidence dominate the market. Every time the price approaches this trend line, investors see it as a buying opportunity. Because historically, every touch of this line has resulted in upward movement, a belief forms in investor psychology that this line will hold. The stronger this belief, the more persistent and reliable the trend becomes. However, one of the most important aspects to be cautious about in technical analysis is that trend lines are not just levels, but also boundaries. A downward violation of this boundary when the price dips below the trend line often shakes investor confidence. This can lead to panic selling from position holders, accelerating the downward movement. In short, a break of the rising trend line could indicate a trend reversal or at least the beginning of a correction. In the current analysis, a similarly critical threshold appears to be approaching. The price is trading very close to the rising trend line, and the direction taken from this point may determine not just short-term price movements, but also the medium-term market trend. If the price touches the trend line once again and manages to bounce upward, it shows that the trend remains intact and increases the potential for continued upward movement. However, if the price falls below this line, especially with strong volume, then it could be interpreted as a weakening trend and growing selling pressure. Another important factor to monitor is volume data. If the price dips below the trend line with low volume, it can be seen as a temporary violation, and the price may soon re-enter the trend. However, if the breakdown occurs with high volume, it indicates intensified selling pressure and that buyers are no longer strong enough. In such a scenario, not only short-term stop losses are triggered, but medium-term investors may also start reassessing their positions, further accelerating the decline. Post-breakdown retest movements of trend lines are especially important. If the price returns to the broken trend line and starts seeing it as resistance, this confirms the downtrend. However, if the price re-enters the trend during the retest, it's considered a false breakout and may present a new buying opportunity. Therefore, not only the moment of the breakout, but also the behavior afterward should be closely monitored. In summary, the current chart structure shows a clear rising trend line, which plays a crucial role in determining the direction of the price. This line is not just a technical support, but also a boundary where investor psychology is shaped. Every time the price nears this line, the market forms an expectation, and this expectation either materializes positively or turns into a negative shift if a breakdown occurs. Therefore, whether or not the rising trend is maintained will be decisive for the direction of price action. In this context, it is extremely important for investors who closely follow technical analysis to monitor whether the current trend line is maintained and to develop their strategies accordingly. If the price gains strength from this support, a new upward wave may begin. However, if the price dips below the line, downward pressure may increase and deeper corrections may come into play. For this reason, such critical levels must not be overlooked and should be monitored with discipline. It must be remembered that a trend exists as long as the line exists. Once the line is broken, the trend is broken too.
When a careful technical analysis is applied to the chart, it becomes clear that the current price movement has been squeezed into a rather narrow range and is becoming increasingly consolidated. Such price compressions gain the most meaning in technical analysis through the use of the Bollinger Bands indicator. Looking at the current situation, we can see that the Bollinger Bands have gradually come closer together over time and have almost turned into a parallel corridor. This indicates that the market has gone quiet, the price has calmed down, and it is gathering energy before a major move. Bollinger Bands, developed by John Bollinger, are a very powerful volatility indicator. They are based on the assumption that price moves within a certain range defined in terms of standard deviation. The middle band typically represents the 20-day simple moving average, while the upper and lower bands are positioned a certain number of standard deviations above and below this average. These bands expand or contract based on the volatility of the price. The critical point here is this contraction. Because this period of low volatility, market indecision, and participant hesitation is often a precursor to an explosive directional move. The Bollinger Band structure currently observed on the chart perfectly matches this description. Recently, the price has been moving within a narrow horizontal range, and the bands have drawn closer to each other. This contraction, unlike ordinary consolidation, represents a technically significant formation known as a Bollinger Squeeze. As shown in past examples, this formation often marks the beginning of high volume and strongly directional moves. Because the market has been searching for direction for a long time, this state of compression will ultimately result in a breakout. Although the direction of this breakout cannot always be predicted in advance, it is possible to make some forecasts using other technical indicators and price behavior. For instance, if the price approaches the lower band but fails to stay there and starts moving back toward the middle band, this could be a sign of a potential upward breakout. Or, if the price manages to stay above the middle band and remains distant from the lower band, this may also indicate upward pressure. However, the most important factor here is timing, because the narrowing of the Bollinger Bands does not always mean that an immediate breakout will follow. Sometimes this compression can continue for a while longer, putting market participants through a kind of patience test. This is where psychology comes into play. A large portion of investors may grow impatient during this waiting period, feel hesitant due to the lack of direction, and tend to exit the market. But professional investors view such moments as opportunities to take strategic positions before major moves. In the chart currently under analysis, it is also clearly visible that the price is moving within a very narrow range and the Bollinger Bands have become almost parallel. This is a strong technical signal that a directional move could start at any moment. After this compression, the price will either break through the upper band sharply and begin a strong upward trend, or it will fall below the lower band and enter a new wave of decline. Whichever direction it takes, this breakout will most likely be supported by high volume and a dramatic increase in volatility.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon!